Hello, everyone. Thank you so much for joining me. Today is a huge day in the auto industry. For the first time ever, a legacy automaker has given us the chance to see how much money they're making, or in this case, losing on their EV business, which I think tells a lot of stories about what's about to come in the next 5 to 10 years. Without further ado, let's get started. We have a lot of data to go through. Anthony M., thank you so much for becoming a member of the channel. Real quick, if you want to become a member as well, you can click on join right below this video. You get access to some cool emojis as well as to some member-only content on Fridays, as well as access to our private Discord. Ford is so brave for doing this, man. Huge props to Ford. You guys are awesome. Jim Farley and the entire leadership team, you guys deserve a lot of credit. Huge props to Jim Farley and the Ford leadership. Seriously, this is a very brave thing you guys just did. I'm sure it took an incredible amount of effort to break out these things and allow everybody to go in and basically criticize the hell out of your company. And you're the first legacy automaker who has done this. Thank you so much for doing this. I think the investor base is going to be very happy with this to get that transparency. And it really shows just how transparent Ford is as a company. And they want to get better. And it's very, very obvious. So props to you guys. And now the ball is in GM's court, the so-called leader of EVs, Mary Barra and the entire team there. You guys are talking the talk. You're not walking it. Let us know how you're doing on the EV side of the business. Your competitor just did. It's your turn. Here we go. So this is the total company results from 2021 and 2022 from the standpoint of EV, gas, and what they're calling their pro business, which is more commercial. So this is what it usually looks like on this left side here. They break it up by different regions, 2021 numbers, 2022 numbers, and this is basically how much money they made in each year from these regions and these sort of segments. Now, starting with really the first quarter of 2023 and the full year for 2021 and 2022, it's broken out by Ford Blue, which is their gas car business, Ford Pro, which is their commercial business, and then Ford Model E, which is their EV business. And this is where all the fun of this video is going to be today. In 2021, Ford lost $0.9 billion, so $900 million in that division. And in 2022, they lost $2.1 billion from that division. And so what I want to do in this video is really deep dive that side of the business, because as we all know, a lot of us that follow this channel, we all know this is where the car market is going, like it or not. And so we really need to understand what Ford is doing right now and what their plans are for the next few years. So this is a slide from Ford's presentation today. It breaks out Ford Model E, the business, down by how many units they sold, how much money they made, revenue, EBIT, which is earnings before interest and taxes, basically a loose way of saying how much money they made from the business, and their EBIT margin, which is basically the percent. The big numbers here that jump out to me is that Ford, as a total business, sold about 96,000 EVs total in 2022, including joint ventures. So things like the Ford Explorer that's launching at the end of this year with Volkswagen, those kind of cars would be included in this. And then they made negative 40% margin on those 96,000 cars sold in 2022. Now, of course, Ford kept saying, and we all know that this is an investment. They have a lot of work to do, and we all knew they were losing money, but now we know exactly how much money they're losing, about 40% margin per car sold. If you just extrapolate this out per unit, Ford lost about $22,000 per EV sold in 2022 at $5.3 billion of revenue from those 96,000 cars. And this correlates basically to 40% EBIT margin, earnings before interest and taxes. Now, this, of course, seems like a really bad number. And Ford has given guidance on how they're going to get better. But I think what's really interesting here is that now we have a company that we compare this to. Finally, we can compare legacy automakers to Tesla in a true one-to-one basis as close as humanly possible. And so let's compare it to Tesla. Let's see if we can find a year where Tesla was right around those levels and see how Tesla sort of evolved over time and what Ford's goals are, using Tesla as a proxy to see if they're achievable. So in 2017 full year, Tesla did about 101,312 units, which is very, very close to the 96,000 that Ford did in 2022. So the Tesla 2017 and Ford 2022 is what I'm using as like, hey, this is a starting point for these companies, and let's see what Tesla did, and let's see what Ford's going to do moving forward. So this is Tesla's income statement. It's basically just a bunch of numbers if you're not familiar with it. But really, the number we want to really focus on is this number down here, which is the $1.6 billion lost from operations. And then we have to add in this other income and net to get it as close as possible to this EBIT number that Ford is using, so we can use one-to-one relationships in the numbers that Ford is saying they're doing and what Tesla did in 2017. If we use those same numbers, roughly, it's probably off by like a few bucks, but it's extremely close. It's basically what we call directionally correct. Tesla in 2017 lost $17,000 per car sold on $8.5 billion of revenue at 101,000 units sold. And that correlates to about negative 20% EBIT margin. If you're enjoying this content so far, I would love it if you throw me a like. It helps the YouTube algorithm show this to more people, as well as clicking on subscribe if you want to see more content from me in the future. And I also have a newsletter every single Wednesday at farzadmisbahi.substack.com. You can find a link for that in the description below. Thank you so much for your support. Now let's take a look at what Ford's targets are for the next 5 years. So these are targeted operating metrics by the end of 2026. It's another way of thinking about this is what they're going to do, what they're planning to do for the full year of 2027. These are end of 2026 targets. So they're looking to get to 8% EBIT margin for the Model E, so from negative 40 to 8% positive. And they're also looking to get to 2 million global EV production run rate for their EV business. This is the end of 2026. So we can assume that in 2027, theoretically, they should sell at least 2 million units in that year, because I'm guessing if they're going to produce them, they're probably going to want to sell them. That's probably a reasonable expectation. And so very, very important to keep this in mind. Run rate full year 2027 for 2 million full year production and 8% EBIT. It's a 2027 number, which is 5 years after 2022. And so now let's compare to what Tesla actually did in 2022, which is 5 years after 2017, and see how realistic these targets are from Ford and what kind of questions these bring up. So in 2022 full year, Tesla delivered 1.3 million cars, and they produced 1.369 cars in the full year of 2022, 5 years after 2017, where they did about 100,000 cars. If we look at Tesla's financial summary, there are a few numbers we can look at to try and get to that apples to apples comparison. The operating margin, which is loosely that EBIT margin, not quite, was about 16.8%. And for us to kind of get it to that apples to apples comparison, we have to add in this other income and expense net number, which is negative 42 billion in Q4, negative 85 billion in Q3, positive 28 in Q2, and positive 56 in Q1, which is kind of a wash, right? So that 16% number, that EBIT margin of 16%, is going to be very, very close to that apples to apples comparison for Ford. Let's put a chart together and see just side by side what Ford wants to do and what Tesla did in those 5 years from that start point. So a start point for Ford in 2022 was 96,000 units, and they're trying to get to 2 million 5 years later. Tesla did about 101,000, and they did 1.369 million units. From the EBIT margin perspective, Ford clocked in at negative 40% actual, and their target is to get to 8% positive. Tesla did negative 20% actual, and they did 16% actual. So Ford is targeting significantly more units, and Ford is targeting significantly less margin in those 5 years. That unit growth from the 96 to that 2 million is 83% compounded annual growth rate, or 83% year over year. And that number is significantly more than Tesla's 50% year over year target that they have set forever, it seems like. So Ford's growth ambitions seem to be significantly larger than Tesla's. And so really the question becomes here, is this possible? Is Ford going to be able to outpace Tesla's growth, which many experts have called many, many times already quite impressive? And Ford is looking to do this significantly faster. And so is this a possible goal for Ford? Now, let's go ahead and also look at how Ford is going to reach that higher margin goal of 8% from negative 40% margin for the EV business. By far, the biggest part of the pie, the biggest piece of the pie, is scale, which is how many factories they can build and how many machines they can install in order to essentially absorb the total costs of creating those EVs so that they can spread them out over as many cars as humanly possible. 15% is design and engineering, 10% is battery, and then 3% is whatever else. The important thing to keep in mind here is that Ford is assuming some sort of pricing headwinds, meaning that they're expecting some pretty big competition in the future from a pricing perspective, and they want to bake that in for their assumptions for that 8% margin goal. Just want to make sure that I highlight that. And so scale is by far the biggest piece of the puzzle. If we look at it again, scale is going to be make or break really for them, and design and engineering battery as well, really. But scale is the biggest piece of the pie of these four categories to get to that 8% margin. And so the question becomes for Ford, does this require new factories, or will they leverage existing ICE factories, the gas car factories, to make this happen? So Ford has been doing about 4 million total units globally for the last few years. And if they're reaching 2 million EVs by 2027, this means that half of the total business for Ford is going to be EVs, assuming that the gas car business continues to grow, which a lot of experts don't think is going to be the case. A lot of people think it's going to be a transition from EVs to gas cars, which means that Ford's gas car business will shrink over time if this is the truth. And so what happens to the rest of the ICE business for Ford and all the liabilities and factories and financing that Ford has attached to that car business that is going down year over year in that gas car business? If we look at the same presentation deck broken up by these different things, by the Ford Blue, the gas car business, Ford Model E, the EV side of the business, you can see that in 2022, like we know, Ford lost about $2 billion in the EV side of the business. However, they made $6.8 billion from the gas car business, and they also made $2.7 billion from the Ford credit business. But these are not going to be there. A lot of people are thinking that they're going to go down dramatically. So what happens to all those things that they've invested in that they essentially have to drag along into 2026 and 2027 as they try and make money on the EV side of the business? Seems like a pretty difficult task, in my opinion. Ford also wants to lower brands they offer and focus on vertical integration. This is something that they mentioned on the call from today when they were walking everybody through this thing, which essentially means that this is a huge signal for the entire auto industry. So Ford wants to get away from all the Fiestas and all the different brands, the Focus, and all these car brands we don't see anymore. And they want to really minimize how many cars they sell so they can maximize vertical integration and they can reduce the complexity rather as much as possible to be able to sell these things at a profit. Because the more complex it is, the harder it is to be able to sell these cars at a profit. I really think this is a confirmation that Tesla's model of doing business is being adopted by the auto industry, because otherwise you're going to run into the situation where brands that don't vertically integrate and reduce model complexity will be priced out. And Ford was very clear in saying this today, is that the only reason we can get to 8% margin, which is half of what Tesla is doing today, is only if we vertically integrate and reduce complexity. Otherwise, we're not going to be able to make money on our cars, which I think is, again, a huge signal that says that unless you do this, you are screwed. You will not be able to compete in this world. So model complexity is, I really think, a dead subject when it comes to growth in the EV space. You need less models. You need less types of cars to be able to maximize how much money you're making on these technologies. And I think Ford signaling this is a very clear trend that that's where we're going as the very first legacy automaker that has broken this out. And we're not even talking about autonomy. And this is specifically around just making the cars. And the autonomy piece of it was completely absent from this presentation, understandably so, because there's so much complexity already. But that's another thing to keep in mind here, is that we're not even talking about the autonomy side of the business, which we know Tesla has heavily invested in. And Ford, as a competitor, will need to see if they're going to do the same moving forward in tandem with their breaking out of the EV business and trying to grow that business to 2 million units per year. I truly believe a lot of the arguments around how legacy car companies are going to be able to outstrip, say, Tesla's ability to go into the next decade with electrification, how Tesla's competition is going to be fierce, I think today proves if Ford is a good representation of the legacy auto market, which I really believe they are, because they're the first ones that are doing this. So you would assume they're really investing their time and their knowledge into this. It proves that legacy automakers are at a disadvantage. They have to carry an entire business load with them And they're trying to get to margins that are half of where Tesla is today. And in addition to that, they are using the type of business practices that Tesla really created about 10 years ago. So, this argument around Tesla being, say, a catch up and the legacy automakers can just turn on and go, I think that argument is completely dead. Absolutely and completely dead. And so, what I really hope to see moving forward is that these legacy automakers do everything possible to mitigate and try to remove the impact of the transition away from gas cars into electric vehicles and try their absolute best to figure out how to become as profitable as quickly as humanly possible and also ramp up their figures as quickly as humanly possible as well. Ford has some crazy targets that are significantly above Tesla's, and Tesla, as we all know, has been a company that's been super, super fast in their growth, and Ford wants to beat that, which is incredible. I really commend Ford for doing that. And so now the ball is in everyone else's court. Every other legacy automaker, I believe, is going to be forced to show their hand to see how they're transitioning to the electric vehicle segment. And I think as they do that, it's going to become clearer and clearer that Tesla has the winning formula and that they're not just ahead right now, but they're going to accelerate their domination. And I truly, truly believe this is going to be the case. So best of luck to Ford. I really think they're at least going to try their hardest. I'm not really sure if they're going to survive this decade, but they're really trying, and that's really all that matters here to try and move forward. And for every single legacy automaker out there that hasn't done this yet, you are already behind and you're even more behind. So get on it. Let's see it. Let's see you actually transition. Let's just not hear what you have to say. Actually prove to us that you're making it happen just like Ford. If you want to support the channel, I have some merch that you can purchase in the description below, just like the shirt I'm wearing right now. Thank you so much for supporting the channel. And then you can also use a coupon for Athletic Greens, which is a supplement that I use every single morning. You get some free travel packs as well as free vitamin D with that coupon. Thank you so much. Thanks again for your support. I hope this video was informative and helpful, and we'll see you on the next one. Take it easy, everybody. Bye-bye.